Good afternoon, good morning, depending on where you are, and welcome to our special event. I've got the trifecta of political power in the room. But before we begin, I want to go through some very important information. All right, we're going to discuss a lot of topics. All right, a lot of stuff that is going to be interesting, fascinating, and hopefully it'll make you a better trader. But what we're discussing is for educational purposes only. We're here to teach you. We're not here telling you what to do, how to do it. This is not investment advice. It's not legal advice. It's not tax advice. Nothing that we say here should be interpreted that way, all right? We're here to teach you, educate you, help you improve yourself. So if we discuss something and then you go do it, all right, it is your fault if it doesn't work out. It is not ours, all right? We're just going through some concepts and pieces that will educate you, all right? Important note for today. So today, we're here for Trading Secrets in Politics for 2021. Policy, money, and volatility. All right? The three things that are going to change in 2021. So much. 2021, I'm excited. So what are we going to discover today? All right? What the current landscape looks like politically, what the bond market looks like, and what's going on in volatility. All right? We're going to go through how the government will dictate money moves in 2021. We're going to talk about the bond market. What could happen to inflation? All right? Maybe we'll even touch on some crypto and gold. And then I'm going to tell you about my VIX forecast for 2021. And then we'll go through, we'll probably throw out a few trades. All right. And with that, let's begin. First, let's introduce ourselves. I'm Mark Sebastian. I am the founder of OptionPit.com, where we are right now. I was a trader on the Board of Options and the American Stock Exchange for about 10 years. And the firm I was at happened to be the firm that actually started VIX options trading. They were the first market maker. They built the whole apparatus that VIX options are actually traded on now with the SIBO and with Goldman Sachs. And Jim Cramer's VIX guy. So, I'm here as the volatility expert. Our next presenter is William Bill Griffo. And Bill, why don't you briefly introduce yourself?
Sure. Thank you. I am the head income trader at OptionPit.com, and I've been in the market for 40 years. I started back in 1981. And yes, being a trading dinosaur can be a positive because that's the last time we had inflation. So I'd say inflation and knowing how to trade against the Fed are my two expertises. And we'll get into more of that today.
And then our final and best looking speaker is one Frank Gregory Esquire. Frank, why don't you give us a brief lowdown on who you are?
Yeah, I had the benefit of working both DC, K Street, and Wall Street. I spent the first 10 years of my career after graduating from one of the best schools in Pennsylvania. I went to law school at Duke, and ended up back in DC, where I practiced law for about a decade. During that time, actually just before then, I did do a stint on Capitol Hill, and had the pleasure of taking a future Supreme Court justice around to meet all of the other senators on the Judiciary Committee at the time, Antonin Scalia, back in 1986. And during that time, I met Joe Biden, sat in his office, had a nice discussion with Scalia, with Biden, and you really got to see how he viewed the Supreme Court. I think very different than he views it today. But after practicing law for 10 years, I came up to New York, to Wall Street, and I've been here for about 20 years. And really spent a lot of time trying to connect the dots between DC and Wall Street. And when I made that move, it became painfully obvious to me. Whenever you'd read the paper, I'd see how things react in the markets, and you'd really start connecting the dots. And I know these two guys on the call feel the same way. You can really start seeing how things move together.
Yeah, more and more. And and I know we've said this a couple times. Antonin Scalia definitely had some controversy. He was confirmed
98-0.
98-0.
Picture that vote today.
That would be an interesting one today. All right. So let's talk about what's going on with volatility. All right. I'm going to jump right in on volatility. Then we'll do a little update on the bond market, and then we'll get into the political landscape. So a couple things going on with SPX that I think are really fascinating. And since Joe Biden got put in office, a couple things have been happening. The blue line is movement in the S&P. And what do we notice is happening with movement in the S&P? It is dropping. That is a 20-day trailing movement in the S&P. It's down to 10%. And yet vol, the red line is a product I use called Live Vol's version of the VIX. It's essentially VIX. So you have realized volatility at about 10, and you have the VIX, at this time about 20. As I pull it up right now, as I pull it up on my screens, the VIX is about 24. So you have a giant spread between where the market, how much the market is moving, and where the VIX itself is pricing right now. And I think that's important. Now, another piece in the volatility landscape that I think is interesting, again, since Joe Biden got elected, won the election, and then won the Electoral College, and then got confirmed by Congress, the S&P 500 has essentially gone straight up. About 3,500 to almost 3,800 now. Yet, volatility, the whole ride up, has remained firm. A rallying market and firm volatility. Typically, that is not a great sign. That is a sign that as we rally, markets are being hedged. Traders are selling out of equity and replacing with call options. Or they're buying puts. All right, it is not a sign of collaring, it's a sign of stock replacement. Stock replacement using options tends to be a point where people get a little worried. And if you want to know why, I think we're going to hit on some of that. So let's kind of talk about what's going on in the bond market, Bill. What is going on in the bond market?
Well, everybody wants to see a V recovery, and we're actually getting one in personal income. We get just about every shape recovery you can imagine, depending on the sector of the economy. And you got to hand it to the Fed and Congress. They know how to print money. They guess perfectly on how much to print in order to compensate people so that the income back to levels. And I think the next couple of stimulus packages will put it a little bit over the top, especially when you get $1,600 more to households, as Biden mentioned last night, and it could definitely fuel some spending. So that's really what we're looking for, right? I mean, most of the money that's been printed has gone into savings and maybe a little bit into the Robinhood account and a little bit into down debt. But I think now we'll start to see a little bit of spending.
Yeah,
That
was a big thing. Debt's really, people have paid off a lot of credit card debt, right?
Yes. No, it's incredible. I saw that number yesterday, and I thought it was pretty shocking. Which is a very smart thing to do.
People have been, don't forget, COVID has allowed people to sit on a lot of cash.
Absolutely. No, that's what this is showing. The one thing that they were able to do was compensate people. But here's my concern with that, because basically they're paying Americans not to work. And I don't know about you guys, but I have a lot of friends who are very happy staying at home with their kids. They're all collecting the unemployment insurance. They're getting the stimulus checks, and they couldn't be any happier. So what does that do as far as getting back to work? So that's I think the issue we face. Mark, if you want to put up the next slide, I think it comes home there and shows that concern. Here's a different shape recovery. This is the backward square root equation, right? I mean, and it actually looks like it could be turning down now.
What is
And
the
this is
backward square root equation? What exactly am I looking at?
Well, if you turn this the other way, you know what a square root looks like, right? It's this,
Yeah.
it's almost exactly this, backwards.
Okay.
And the issue, and the reason why this is such a big issue is because this is simply the most important Fed mandate is full employment. You cannot have a good recovery in the economy without, jobs, and more jobs. So I think that's the issue that I have. And the other one is to get inflation to 2%. They haven't met either. So even though all our indications, and this is on our income, if you look on the tab, we report this once a week to show where we are. Right now, it's all green. And so I think that thing, and we're going to be stimulus, but it's going to find its way into jobs. I think Frank has a little more insight on that legislatively.
Yeah. So Frank, what's the lead headline is obviously the impeachment, right? That's the headline that's maybe swallowing all the air in the room for Joe Biden's policies that he's trying to build support for, right? And
Mark, you kind of hit the nail on the head. I mean, I think that the Biden administration is going to have a heart-to-heart with congressional leadership on this, because they've got a very aggressive agenda that we'll discuss. And that is, if they pursue this impeachment, it's going to get in the way of a number of things. It's going to get in the way of Biden's appointees being confirmed by the Senate. It's going to get in the way of Congress moving forward to enact the agenda, very aggressive agenda that Biden has in mind. So they've got to be very careful of that. I mean, if you remember going back, a year ago, that the impeachment trial, which then was a lot more straightforward and a lot more traditional, if you will, than what's going on today, it's assumed almost 100% of Congress's time. They got nothing done during that time period. And here, you've got, the House voted to impeach. You had 100% of Democrats, 10% of, 10 Republicans siding with them to, go with a single article of impeachment alleging incitement of insurrection. It's got to go to the Senate. The Senate has to vote. It needs a 2/3 vote in the Senate to convict. And, there's been a lot of rumors floating around about senators, kind of agreeing with it and maybe voting for it. But the fact is, I think that's all for show. McConnell has said he's not going to call it. The Senate's out right now. He's not going to call the Senate back in a session until January 19th, which is one day before Trump leaves office. And I'm just not sure, why you want to pursue it at that point. I'm not sure that constitutionally they can pursue it once Trump is out of office. And at that point, if they do try, it's going to go to the Supreme Court. Really going to be an absolute mess as far as tying up Congress, tying up DC again. And I got to tell you, when I start, you look at the volatility chart, and if my thesis stands, which I believe it does, that, the volatility of DC starts mirroring what's going on in the market, I don't see necessarily that volatility slowing down for the short term.
Yeah.
Particularly if they pursue this.
Yeah, it's interesting, right? They're getting their wish, right? He's going away. And it's like they don't want him to go away now.
Well, look, the goal is to keep him from being able to run again. That's why they're pursuing this so hard. Their fear is that in 4 years he steps back up and he runs again. And they want to try and prevent that. So, if you get the conviction in the Senate, Then there'd be a second vote in the Senate, and by simple majority, they could declare him ineligible to run for office again. The other way they might do it, which was included in the article, is you do it from the standpoint of the 14th Amendment, which prevented soldiers from the insurrection back in the Civil War from holding office once the country reunified. But again, long shots. Now, I will say this for him though. They set. Do you know they set 2 records with this impeachment?
What 2 records?
Well, it was done in 7 hours. It was the single fastest impeachment in U.S. history.
Okay.
0 witnesses, 0 testimony, fastest in history, which seems very, in line with our ways of handling trials. And but also second time, only the first time a president's been impeached twice. So we had 2 records set.
Wow. And last question about this: can they vote to disqualify him from running for president without getting a conviction on impeachment?
No.
They can't. Okay.
No.
Interesting. All right.
Now, doesn't mean they won't try.
Does not mean they won't try. All right. So now that we've kind of just covered what's going on currently, let's talk about some appointees. And obviously, we're here to talk about money. The biggest money appointee is our wonderful old friend, former Fed chair, Janet Yellen.
Not only former Fed chair, but also former head of the Council of Economic Advisors. So she's not only is she the first woman to be appointed to Treasury, she's the first person to hold all 3 of those offices, which are arguably the top 3 economic offices in the country.
Wow.
And I put this first bullet point on here because she will be the first nominee going through the confirmation process. In fact, on 119, which is the day before Biden is even inaugurated, which shows you the importance they put on her and, and how she's viewed. So they want to get her in, they want to get her in fast. And she's already named her undersecretaries. She and Biden have already named, are looking at them. They too have to go through the confirmation process. But, you start looking at that revolving door between Wall Street and K Street that I always talk about. And boy, they're just flowing through. I mean, it looks like, you've got 2 of the keys undersecretaries are former BlackRock, will be former BlackRock executives. You've got a lot of folks who are everybody who she's bringing on board were in either the Obama and or the Clinton administrations.
Oh,
so
wow.
They're really stacking it with hardline, old school DC people who in the past couple of years have moved on, gone into the private world and come back in. But, you've got some folks that, are high profile and also have a lot of, while Yellen, people look at her as being, I don't know how middle of the road she is, but, she's certainly, according to the press, folks will tell you she's pretty middle of the road and a neutral party. But you start looking at some of the folks she's bringing on board. Her deputy Treasury Secretary was the head of the Consumer Financial Protection Bureau. He was the chief of staff to Warren when she was running the Consumer Financial Protection Bureau. So he's certainly pretty activist. The person they want to bring in for the Office of Management and Budget, Neera Tanden. She's the head of currently the head of the liberal think tank American Progress, Center for American Progress. Now, Senator Cornyn from Texas has said, quote, she stands a 0 chance of being confirmed. So we'll see how that one goes. Known more for her tweeting than her policies.
Is the vice president able to vote on confirming nominees to the cabinet?
Generally,
Senate is 50-50.
Historically, that because that impacts the executive branch, the vice presidents have not done that, but you never know. It's a brave new world. Kamala Harris is going to be a different kind of vice president, much more activist. Keep in mind, you've got now a vice president when she was actually, I think she hasn't even resigned her Senate seat yet, I don't believe, which is interesting. But, as a senator, she has, in the history of the Senate, the most liberal voting record in the history of the Senate. So,
Yes.
I don't think she's going to be shy about exercising her power.
I was going to say one thing about, I read something last night because I saw a cat asking about MMT and if Janet can have an impact on that, because that's really the big thing, right? And they would have to go back to 1913 and change the rules within the Fed's legislation, and, to allow that. And I think that's one of these things, that they're hiring all these people so she can work with them and get that done, because that's a big legislation that would have to be changed. But the only way they know that they can actually create inflation is MMT, and get the Fed to be able to direct money directly into the economy instead of just the banking system. So I think that's a really big part of Janet, because she's so well liked.
Yeah, look, I think she's going to be interesting. Yellen is, they call her a dove, but she's not afraid to be hawkish when need be, to stimulate the economy. And let's face it, the economy is going to need some stimulation. Not just, everyone's obsessed with taking care of COVID, getting COVID under control, but the fact is, we need to get hundreds of thousands, if not millions of people back to work.
Absolutely.
We need to get this economy jump started again. We need to get it moving. So I think you're going to see, with a person who's not afraid to use the power of the government, I think you're going to see a massive pro-stimulus policy coming out of her office. Strong U.S. dollar policy, which has been taken down a bit under Trump. You're going to see this big move to get to get it started. She's a she's a longtime Keynesian advocate, right?
Yeah.
And and I'd argue, look, I was more of a Friedman guy, but John Maynard, to some degree, gets a bad rap. There's that balance, right? I think she understands what John Maynard Keynes was really about, and that was short-term blast from the government to help jumpstart the economy, not what Keynes is viewed as today, which is permanent government help. So she's not afraid to use it, and not afraid to make an impact. And I got to tell you, in the short run, I think it's going to be good for stocks. You're going to see a bump in GDP. You're going to see some good movement that should help stocks, particularly as we talk about in a minute. The massive infrastructure spending that's going to come along, and also she's got, it's interesting. One person that no one's talking about is the guy who's going to be the new SEC chair, Gary Gensler. He's an ideologue and a hard liner. He's going to come down hard on the financial services sector. I don't know that I want to be running a big financial services.
Well, the question then is Robinhood's about to IPO.
Yeah.
Right? And all these SPACs that are coming out, and the different loans, that's an interesting, that's where the SEC could really cause some havoc, right?
Well,
in the last year, we've seen options volume explode because Citadel is paying through the nose to Robinhood to allow people to trade for free. I've been arguing payment for order flow is a huge conflict of interest for years. Is this the guy, a hard liner that comes in and says, you know what, this needs to go? In which case, trading is totally going to change on some sort of ruling like that.
Yeah, do you guys know that there is such a thing as the SEC auditor? I
did not.
Yeah, under Dodd-Frank, created a position called the SEC auditor, and the current auditor, a guy named Kinsler, submitted his report at the end of January, and in it stated that the deregulatory policies under Clayton at the SEC were an abject failure and let down the consumer. So I think you're going to see a massive shift in policy coming out of the SEC, under the guise of going back to Dodd-Frank, protecting the underlying consumer.
Wow, that's interesting.
Yeah, that's definitely what Janet's all about. I mean, the other record she holds is from 2014 to 2017. She increased employment every month for 36 months. And I think employment rate went from like 6.7 to 4. So there's no doubt, like you said, they're bringing her in here to find a way to create jobs, and they better infrastructure spending plan, before the spring.
Yeah. Well, I'll tell you, and not to jump forward, but Mark, you mentioned you might touch on crypto. One thing about the new SEC chairman, he teaches blockchain and crypto policy at universities.
Oh.
So that's going to be interesting to watch as well, how they start treating that. You got a lot of, ETFs. You've already got some crypto funds. You've got some ETFs that have yet to be lit up.
Yeah.
There's a couple that are in the queue. It'll be interesting to see how they treat those now.
That's fascinating. Yeah, I mean, and look what they did to Ripple, right? They came down, the SEC came down hard on the Ripple, basically accused them of running a Ponzi scheme. Meanwhile, they basically let Ethereum and Bitcoin kind of do their own thing.
Yeah, they created a I think a bizarre artificial loophole on that one.
Yeah. Yeah. All right. So what we got going on in terms of where money is going to go?
All right. Everyone likes to prognosticate. It's fun. My prognosis is mixed. So I've got 2 in green and 2 in red. So I think we've got some competing factors, but the big one, and I think obviously the one everyone's talking about is 1.9 trillion of new stimulus that is going to hit the marketplace. Particularly we just had Griff, you and I were talking this morning. We had some bad job numbers come out, 140,000 job losses in December, and as Biden said over the last 40 hours, quote, "The bottom line is we need to provide more immediate relief for working families and businesses now." So they want to get this money pumped in. You're going to see, that additional stimulus. People got their $600 checks. You're going to see an additional $1,400 coming out to bump it up to a total of $2,000. You're going to see a lot more aid to state and local jurisdictions for, unemployment benefits, and they're going to do $160 billion will go to a national vaccine program to try and get that pushed out. That's a huge push for the administration. But I got to tell you, the one thing, I've got the red down here, $15 minimum wage across the board. That's certainly something that you're going to see coming out of the Department of Labor. Marty Walsh, the new labor secretary, is a huge proponent of that. So are a lot of other people in Congress and the administration. And by the way, that's across the board, regardless of where you live, they want to do a $15 minimum wage. But in this $1.9 trillion stimulus package that Biden's talking about, he slipped in a minimum wage bill. So it looks like they might try and get that $15 minimum wage slipped in to the stimulus package bill, which would just blow my mind, because that is completely antithetical to trying to bring this economy out, to try and help the small businesses that have been absolutely devastated by being shut down. I just don't know how those two gel. It's 100% a partisan policy issue. It's not something that will help the economy at all.
Yeah.
I would have been better off coming up with universal basic income, don't you think, Frank? Just give the people the money instead of hurt the businesses so that they get it.
Yeah, well, I mean, look, I think we can, we're on what? We'll be on stimulus number 3. If you go stimulus 4, 5, 6, you're basically giving universal basic income at that point.
Right.
So,
and this affects different companies, right? McDonald's is already paying their employees $13 an hour or something like that in most places, right? This doesn't really affect McDonald's. It doesn't affect Wendy's. But it does affect, if they going to keep the exclusion for wait staff and for bartenders, things like that. That could have a profound effect on restaurants. And in which case it would affect, they're going to have to pass that directly through to how much they charge you for food.
Yeah, I missed that. I think, Bill, you could probably comment on that, because you were discussing the tip issue earlier.
Yeah. No, I mean, I think, I just saw that I think it's political move for the lower level voters. And I just saw somebody just mention that. That's the only thing you can really tie it to, because it doesn't make sense if you really want to help the small businesses.
Yeah.
And if you're going to now take out the fact that you can't include tips as the wages, everyone's going to have to raise costs. Yeah. That's the last thing you need for these small businesses, restaurants.
Yeah, and look, someone just, I saw someone just, put a comment up that, a lot of states have already moved. That's true. Yes. A lot of states have, but most of them keep those exclusions for tipped employees. And if they take that out and just do a flat minimum wage for all employees, it's going to be
a
really
mess.
Going to get hit off.
Yeah,
it's going to be a mess.
I'll tell you this much: if I know that my waiter is making $15 an hour, goodbye the old 23, 24, 25% tip from Mark Sebastian. right? We're doing,
You know, and look, and the sad irony of this again, I love when the government tells you, it knows more than you do. Most, you talk to most waiters, particularly ones in major metropolitan areas, they don't want this.
no.
Yeah.
People said Mark's a generous. I met my wife when she was a waitress at the store around the corner from me. So, at the bar around the corner from me. So I have a soft spot for wait staff. Good.
All right. Well, let's move on here because I think the next again what's going to come down as a big negative, and this is not going to happen immediately, but certainly they're going to start looking at this into the second quarter. Taxes are going, as the Rolling Stones say, up, up, up. Mm-hmm. So, and that's individual, corporate, and I put other because there's some things that are going to go on potentially with 401k plans that that kind of falls into individual, but you're going to have marginal rates. Biden said that he's not going to touch people below 400 grand, but the marginal rates for people making over 400 grand are going to go up to 39.6. You tack on a 12.4% Social Security payroll tax that's going to be split evenly between employers and employees, and you've now got a marginal rate well into the 40s. For the higher income earners, very little deduction on everything. All the tax policy experts I've been looking at, the lower people are not getting, they're not going to get any cuts by any stretch. So you're really just taxing those, high, income earners, high income spenders. You're also going to see the one that really, I think from an investment standpoint scares me is when, long-term capital gains and dividends are going to be taxed at, the 39.6% top end rate. That's really going to hurt investing. And the other thing that hasn't got a lot of attention is itemized deductions for those making over 400 grand are going to be capped at 28%.
Except for salt, right?
No, salt's going to go fine.
Yeah, salt will go fine.
Which again is, as you and I talked about though, Mark. I mean, I think some things that were hurt, unintentionally by tax cuts like REITs, and real estate investments, they could see a resurgence in this kind of a
right. No, that's what I've been saying, Frank. I mean, that's a great way because they actually give you a very, very good income plus the protection because they're in real assets.
Yeah, we'll look at a couple of REITs toward the end of the presentation, Bill, if you've got one or two in mind. Yeah. One question, one thing that I'm interested in, and I don't know that we have an answer yet, is I think the biggest piece of this whole tax thing is the optics of Bezos and Musk and Gates and Schmidt making trillions, and those companies making trillions of dollars, and those men making $100 billion each during the pandemic, right? The optics there are going to be addressed by this group, and
this group's angry over that.
Oh, I think I'll bet you a lot of people are angry over that.
Well, look, one of the things I think there's a bunch of things falling in line here when you start looking at different disparate parts of the tax scheme that's going to happen that are not going to bode well for large cap multinational companies. Mm-hmm. One is you've got, there's going to be, they want to impose a 10% surcharge on corporations that offshore manufacture, jobs. So, that they look at, hurting the domestic marketplace. If you look at, the corporate tax rate going from 21 to 28%, you throw that on top, you're talking about almost a 31% corporate tax rate if corporations are offshoring jobs, which a lot of those big, particularly the gigs, a lot of those big tech companies do. You start looking at what they want to do potentially with the 401k marketplace, removing the itemized deductions and going to a flat, they call it an equalizer to try and equal out between high earners and low earners, and going to a flat tax credit, not a deduction, that's going to reduce the amount of money flowing into 401k plans. And just follow me here for a second. Where does that money go to? The majority of it. The majority of that goes, which is, the 401k market is double-digit trillions of dollars. That money primarily goes into large cap mutual funds. Large cap mutual funds are the largest purchasers of those large cap stocks. And if you see a pullback there, it's going to be a multi-level hit on those large cap companies.
Yeah, they're going to take a lot of the stuff out for stock buybacks. But yeah, you're right. There's a lot of layers to that onion. And I'm really interested in because there is blood in their eyes for Musk and Bezos and these guys, not for what they do, but for how much money they have.
Yeah. So, and I think they're going to get, they're going to figure they're not going to be popular guys.
No, they won't. And so you're going to see, I think, some aggressive attempts to tax Facebook and Amazon and Google. And that's why I my eyebrow raised when, it was announced that Europe was coming back here to start figuring out a tax plan for Google and Facebook and Amazons of the world.
Well, right. So here, let's put let me put a couple numbers in around this for you. I was reading a report from B of A this past week, and their analysts, when they looked at Biden's tax plan, said they looked at it from a S&P earnings perspective, and they believe that the Biden tax plan will cause a 9.2% hit to the technology sector on earnings.
Wow.
Healthcare down 8.4, financials down 6.5.
Yeah.
So you're going to see some earnings hits here from that.
Healthcare will make it up with Medicare expansion. Financials will make it up with having all their buddies in Congress somehow. But yeah, I think those tech guys, there's some real risk there. All right, now the final piece, and I think this is the big one, right? The infrastructure.
Yeah, it is the big one. And you're going to see massive infrastructure spending, and it's going to tilt towards, Green New Deal type focuses. And why don't you flip to the next page, and we'd probably get a better view of it. Yeah. So I mean, they want to do a $2 trillion accelerated investment into infrastructure spending. As Biden said, it's going to be the largest mobilization of public investments in procurement, infrastructure, and R&D since World War II. Pretty lofty, but it's going to touch every aspect of the economy. I mean, you're talking roads, bridges, more the traditional brick and mortar, but also moving into the 21st century. You're going to really see a lot of investments into electric vehicles, but not just cars. You're going to see rail networks, public transportation, obviously, the green power, the solar powers. They want to upgrade 4 million buildings across the U.S. to make them more energy efficient and weatherize 2 million homes. When they build, housing for low-income housing, they want to make them sustainable. And obviously big investments in clean energy tech, such as battery storage, and emissions. And there's going to be, massive, I think, folks, companies that commit to not only doing clean tech, but also clean tech produced and sourced in the United States. You're going to, one of the things about the tax package, they're going to get huge incentives to do that. So I think you're going to see that a step up. And the one thing that jumped out is right now we've got about there's less than 29,000 EV charging stations across the U.S. The goal is 500,000 EV charging stations.
Wow.
When underneath this proposal. So obviously,
well, I can tell you this much: if the stimulus package involves upgrading LaGuardia, I'm on board.
Actually, no, because LaGuardia's been being upgraded for 30 years, and it's a nightmare to get it out.
And it's been a dump, and it's still a dump.
I'll tell you one thing. I'm going to be 3.
We hit a raw nerve there. a term with B is nice, right? I think.
Yeah, no, yeah, exactly. Yeah, so I think this touches, and I'm going to give a couple, we're going to give you some green energy stocks that we think are going to play well that maybe you haven't thought about when we come back around. And the nice thing is we've got that actually merge really well with inflation as well. Frank's got a couple of thoughts on, some assets that do well in inflation that also will do well in, if, with an infrastructure spend. And, the nice thing is we got Bill here to kind of point out the best ways to trade those assets as well. So which brings us to the 30-year bond. So if we're spending, Frank, I mean, how much does all this add up to? I mean, they're not going to be able to tax enough to cover it all. The idea is the theory is that over time this easily pays for itself because of the increase in economic growth and yada yada yada.
Right.
But short dated, we could tax everyone in the United States, their entire income, and we wouldn't be able to cover all these costs.
No, that's why. I mean, you got to get GNP rocking. You got to get the economy wildly jump started from here in order to do that. And you're gonna, as we've discussed, I think they're going to try and do that, and then the fear becomes down the road: do you overcook it?
Yeah.
And
Well, yeah, because that they're going to make a mistake. They have every time in the past, and that's kind of what will tip the scale. And I think it's really important to follow it very, very closely when that getting out of control. So that's what people want to look for. But I think the important thing that I wanted to get across about interest rates is it's the foundation of all global capital markets. So there's a tug of war going on right now between what your investment rate of return is and what inflation rates are going to be, right? Because not many people know really how to deal with inflation, but it's a tax on your returns. So whatever your annual returns are, you have to subtract the inflation rate, and that's really what your return is. So you can see with bonds are struggling as well, because right now inflation is around 1.6. Is it going to 2? Is it going to 2.5? So rates are really being pushed higher. And that's why, I think one of the markets, you see me talking about TL, and I think trading bonds in 2021 there's going to be such a powerful force that you're going to want to always be putting on bearish trades anytime TLT rallies. You don't necessarily want to sell it when it's down because the Fed's always lurking. So, you want to sell it when it rallies and then cover it at support. And I think you can do that all year long. Look at this nice channel you've had on the yield side in the 30-year. Now it's the moving average is starting to slope up. And I think we're going to see rates go up for a very long time. You see the cycle, right? The last time they were up was in the 70s, and now we're at zero rates. This thing is going to turn, the rate's going to go higher. So, I think it's really important to try and focus on bonds and try and get some signs from them on where we're going. It's the first time in 40 years we've become concerned about it. And, the other concern is supply. As Frank said, we're going to need so much supply. Every dollar Fed prints. I think that's Denny. But if you have so much supply, that's another thing really weighing on. And you can see it when you look at the 2-year, 10-year. So the yield curve is really important because the Fed has to issue 4.4 trillion bonds this year. Every quarter, we're going to get over $1 trillion. And so they have to spread it out. So you get bonds in 2 years, 3 years, 5 years, 7 years, 10 years, 20 and 30 every month. And I'll keep reporting about them because we want to see how these bonds being absorbed. The 2-year, 10-year shows you all the pressures in the 30-year. Because the 2-year is close to 0%, or this is the 10-year, and the 10-year is around 1%. And so the 2-year really can't rise much. So we're going to see this curve keep steepening. And you can see that when we had the big rally in bonds, it flattened from 250 basis points to 0. And it usually goes from one edge to the other. So we're going to go up to 250 basis points, and it's going to be mostly because the long end of the goes higher in yield. That's what I think focuses 10-year to 30-year. Look for places to get bear trades on in bonds. Take advantage of all that supply plus the pressure from inflation. And that's the thing that we'll kind of focus on as we go forward.
Yeah. So when, everyone, the reflation trade is probably the most popular trade being talked about right now, right?
Yeah.
Let's talk about maybe a little bit of timing, right? We've got this bazooka of government spending coming, and we're coming out of COVID, right? What's your kind of forecast for the year on inflation, and where do you think the yield on the 10-year note ends up being at the end of the year?
Yeah, no, I think the biggest tug of war in any capital market system is the deflation versus the inflation.
Mm-hmm.
And I actually think, and I wrote a piece about this, that right now I would cover the reflation trades, because I think we're in a period here where you could get a little bit of a correction because of how bad the economic news is going to be on COVID. So COVID is such a wild card that makes you always, move up, your view on inflation, or down, depending on what you think, how bad COVID could stay for how long.
Mm-hmm.
But I do think, my opinion is that we'll probably see the 10-year go between 1.25 to 1.5 before mid-year. And that's where I think the level that the Fed would come in and buy them. So I don't think you're going to get above that, before, maybe in the third or fourth quarter, if you do it all. Because the Fed is going to probably go to even yield curve control. So I think you're going to have, until you break the back of the dollar, I don't think you can get too bearish on rates, because the Fed cannot allow rates to go higher. But that doesn't mean you can't keep making money as the rates back up and then they come lower, right? You play these channels. Like, I think the TLT could come back and try and test that the double bottom, where you broke out of this triangle. So you just have to pick your points to play it. But I think inflation could hit 2.5 to 3% by June or July.
Yeah,
that's my call.
Rafael's pretty opinionated on stuff, but he does bring up a point. We had an incredibly strong bond auction, 30-year bond auction this week.
And look where it was. It was on a big backup in yields.
Yeah.
So like I said, you play the trade, you let the yields back up, but you have to cover. You can't think this is a long-term trade right now until inflation's above 3%. Then the game's, it's game over.
So this is more like a channel, a bouncing channel, than it is a straight down, right?
Absolutely.
This is not like some stock where things are falling apart, right? It's not like a fallen angel. It's a slow ride that takes a while.
Yeah, it absolutely does. It absolutely does, because the Fed is the buyer. They've turned into the buyer of last resort. And when they sense that there's no buyers around, they're going to come in and buy it. And and the reason, and I think this is a good point that just came on, and it's a piece I'm actually going to put out on Monday, showing how extreme a lot of the trades are. The trades are so crowded in like copper, in 30-year bonds. So you have to be careful, because I think everybody's leaning on that. But, I thought this would be a very good, interesting chart to see, because it's almost like we have a crystal ball, right? We are following the 1940s so closely. They also came up with MMT, and they kind of blamed it on the war, but our war is COVID. Yeah. And so that's forcing us to move towards MMT and yield curve controls. They had yield curve controls in the 40s. And this is exactly where we are. We had a banking crisis 10 years ago. The banking crisis was in the 30s. And so it's just unbelievable to me to see that the big deflation really came in 2008. COVID's causing some deflation right now, but I still believe the more powerful forces are inflation. It's just that they won't come out until you get the velocity of money up. We already have the supply of money up. Now we need the velocity, and that's spending. And that will happen. So, COVID is the wild card. You have to play it very close to the vest for now until we see the scales tip, where the Fed potentially is losing control of inflation. And then then you want the long-term short on in bonds.
Interesting.
So, I think it is interesting. And you look at the expectations for inflation going forward. If we were really in deflation right now, would we have this trend up in indications of inflation? No way. They would be actually focusing on deflation. But I think the underlying forces, everybody knows what they are. Commodities are turning the corner. They're going into they could be going into a secular bull market. You don't have the signs of a real deflation market. It's just getting through COVID. And I think this also shows you, so they always say, once the genie comes out of the inflation bottle, it's very hard to get it back in. And that's very true. And the Fed thinks they're going to play this
Very what? You left us on a cliffhanger there.
It's like the end of a series.
Make a mistake.
We lost you there for a second. You literally said the Fed thinks it's going to play this very
very tight, so they think they can tighten. If it goes to 2.5%, there's no way. If they tighten, then we will go into a real crash. And if they don't, we're going to get more inflation. So to me, that's the tipping point. I think it'll be this year, right around mid-year to third quarter. And we'll stay on top of it.
Yeah. All right. So I'm going to give you my 2021 VIX Outlook. And then, Bill, while I'm going through this, I want you to pull up, there's a couple of names that are that Frank brought up over the last couple of days in terms of commodities that are also going to be in huge demand with infrastructure and with Green New Deal spending. Steel, lithium, nickel, copper, silver, and any other ones that I'm thinking about. Oil. I mean, plastic, heavy plastics.
Yeah, petroleum.
I'm gonna want to talk about a couple ways of doing that. We're gonna do that at the end. So, all right, my 2021 VIX Outlook. All right, everybody wants to know what's your
definitely cat rare earth. I love it.
So, the VIX is set to die. All right, now. We have still a lot of fireworks in Washington that I think will give us these blips, right? We saw a blip when they stormed the Capitol and it went from 21 to 27, all right? But we have the economy reopening, right? Texas just crossed vaccinating 1 million people yesterday. Florida, they're vaccinating everybody and their brother, right? My mom and you've got, outside of New York and Illinois where vaccination, and Michigan where vaccinations are an unmitigated disaster, you have a lot of people getting vaccinated, right? We're starting to really see it go out to the general public. We have the stimulus bazooka, and that's kind of my best way of putting it. Like, they are pulling out a giant bazooka of money and spending. And then we have this declining SPX volatility. All right, so something important is happening. All right. On January 20th, and I wrote about this in my blog last night. So if you don't read my blog every day, you should. All right. January 20th has two really important things happening on the exact same day. All right. Frank knows one of them. What's happening on January 20th?
Inauguration.
All right. Now, before Joe Biden gets inaugurated, we also have January VIX expiration. Frank probably knew that too.
Inside baseball.
Yeah, inside baseball. January VIX expiration. All right, so 11 out of 12 months, and I'm pulling that that number out of my butt, but it is most of the time by a wide margin. All right, when a contract becomes that front month, and we're in a contango as we currently are, that front month contract gets smoked. This also happens on the same day that Joe Biden gets officially put in office and Trump is gone. Frank, you tell me if I'm wrong, but I see that as when he actually gets inaugurated, I see that as a volatility reducing event. You think I'm wrong?
That in a vacuum is a volatility reducing event, yes.
Mm-hmm.
Yeah.
So we'll officially have the President Volatility out of office, and we'll have, a president who's claiming, who, based on what we've seen, right, bringing back a lot of the old guard, right? Frank, we've gone through the nominees. If you go through a couple of our presentations, it's a lot of Obama and Clinton people. You said it over and over and over again, right?
It's honestly, if you closed your eyes and hark back to 5 or 6 years ago, you would think you were in the exact same administration.
And that's like a warm blanket for a lot of people, right? It's like so that is going to deflate volatility. So I think we're heading for in a short period of time, a sub 20 VIX. And you're going to see this curve, which is, this curve is, it's planking. All right. And so Bill and Frank, they work out all the time, right? When they're doing their abs, they plank, right? So they get up on their arms and get up on their feet and get their bodies nice and flat. That's why they're in great shape and I'm not. All right. And the VIX has been planking for a very long time in that back month curve. You know how hard it is to hold a plank? Anybody here plank?
Like 30 seconds.
Yeah. Yeah. You try doing it for a minute, 2 minutes. It starts to get real tired. It's very difficult. We're going to see S&P volatility slow down, and you're going to see this curve head back into a traditional volatility formation where the back end of the curve steepens. The reason why the back end of the curve is so flat is because the back end of the curve thinks volatility is coming down. If it was worried about volatility going up, it would already be in a curve. It would already be steep. It is set up because the entire curve is playing for volatility to collapse at some point. So back end of the curve steepens. That is going to kill midterm futures and front month futures. I think in the first 6 months, you're going to see UVXY reverse split. You're going to see VXX reverse split. And this product is going to absolutely get smoked. And it's not one you've thought about. VXZ. So my best trade for the first quarter is the VXZ April 30 puts paying about $2.40. And this is a trade that we have put out, a similar trade, through my Volatility Edge program. All right. Then we're going to talk about a lot of other trades here in a second, but I want to tell you about this incredible offer we've got going. All right. The Volatility Edge. All right. It trades daily and weekly. All right. When vol is exploding, you'll get a trade about every day. When vol's a little slower, we're in a contango. When it's backing off, you'll get a trade 1 or 2 trades a week. All right. I have a proprietary system. My option pit traffic light uses 4 main dynamics. You can go on the web and read all about my traffic light. I wrote a whole blog about it. But it looks at 4 main facets of volatility and spits and lets me know what volatility is likely to do. It's not always right, but it's usually pretty right. And we update that daily. It goes red, yellow, green. Red, volatility is going to fall. Green, volatility is going up. Yellow, volatility is going to move and move hard. You get a weekly wrap-up video. I'll be recording one right after this. You get exact entries and exits emailed and texted to you, and a special customized volatility course. All right. Now, in addition, all right, I got a special bonus for you guys. All right. Frank and I, and Bill, you're welcome to join us if you want.
Sure.
All right. We're doing a special post-inaugural members-only session for Volatility Edge clients. All right. Well, at this point, at that time, we'll know all the nominees. We'll know everybody who's important. All right. And Bill, I might make you come actually now because I may make you come. And we did one of these behind the paywall for some members a few weeks ago. I think a bunch of you were here. Just about every trade we did cleaned up. All right. And it's because when we trade here, we merge the thought process and the story with our volatility knowledge, with our ability to structure trades, so to put you into a position to really make money. All right. So you're going to get this plus my Omaha trades with Warren Market. That's me. And it is a portfolio of trades that we put together that is a long-term portfolio where we manage the book. It rebalances every quarter. And that in itself, we started it in March of 2020, and it has returned 23%. And it is super non-aggressive. So I want everybody who's not a Volage client to join up. All right, you are going to be a happy camper. All right, and I want to give you this real incredible opportunity to join us. So, and I think we've got a lot of clients here that'll tell you, if you're not a client, you're missing out because we go above and beyond. So you're getting 3 months of access to my Volatility Edge program. You're getting this special session with Frank, and I'm going to make Bill come. And those that join are going to get the newsletters for Frank's Power Moves and Frank's and Bill's Power Income. And you're going to be a happy camper. So with that, I will take a couple of questions. While I'm talking, you can register yourself, and then we'll also look at a couple of trades. Do I have any questions for me? I'm going to go straight to my screen. All right, there's a good one. This one's going to be for Bill. Bill, what's your outlook on gold? What do you think about gold versus Bitcoin? That would be.
Well, I think that they're kind of different trades. I mean, I think Bitcoin is an awesome product from the sense of being a crypto and a digital currency. You know, I think that's where central banks are going, and I think central banks, I don't see them using Bitcoin for that, but I see them creating digital dollars. So I think Bitcoin will always have an alternative. There'll be an alternative digital currency, whereas I see gold. Bitcoin's going to outperform gold until we get to the point that inflation is breaking out. Then I think gold becomes the best performing asset because
the gold standard asset.
Exactly. So I think because I think you see what Russia's doing. They're accumulating a lot of gold. China is. People realize the dollar is not going to be the only global reserve currency in the years to come. So once they come out with their currencies, and if they do back it by gold, gold will be just an absolute moonshot. But I think for the time being,
you're one very large magnetic pulse away from losing your Bitcoin. So.
Well, people say that, but I don't believe that can happen. I think that the network is too large. I think the Winklevoss twins have done a pretty good job in building that network, and I think that Bitcoin is here to stay. Personally. But I think Bitcoin, you should have some Bitcoin, you should have some gold. When you think we're at the point of inflation losing control, you should put a lot in gold.
Yeah, Bill, I didn't mean that it was going to go away, Bill. What I meant was that people still want to, you can hold on to a piece of gold. You can't hold on to Bitcoin.
Absolutely.
You can't put it in your hand.
No, that's my big thing too, Frank. I mean, gold has lasted for 6,000 years as a store of wealth. That's why it doesn't go crazy. Look at the volatility. Silver is much more volatile than gold. Because gold's been through this game so many times over and over. And I think that's
I think the ultimate inflationary asset is really a automatic rifle made out of gold.
You have to have
overheats too quickly.
Yes. I don't know. Have you ever looked at the inflation in the .22 caliber bullet?
No, it must be huge.
It's gone straight up. I mean, when I was a kid, a box of bullets was what, like $1.50? A box of bullets is like 20 bucks now.
Wow.
Um,
It says there's no inflation.
right. Well, you know, there's a lot of people. I can tell you, I know a family where they have under their bed 1,022 caliber bullets because they think it's an asset worth holding.
Mm-hmm. Mm-hmm.
In a way, it's similar to gold. Which
That's
is
actually a good point. I saw a guy had crates and crates of ammunition in his garage.
Yeah.
But, you know, I see what's coming across, and, you know, my
Again,
favorite trade.
you also live in Florida, so.
I see that everybody's talking about, I saw some things come across about oil, and I think for right now, energy and oil is the best trade for the next
You
6 months.
right now, you like energy better than you like gold.
Yeah, I think energy is the best investment right now for the next 6 to 9 months. And I think Exxon is a great stock to trade.
I agree. And I put out a couple of trades on Exxon. I think Exxon is going back to 60 bucks. I think that, you know, Frank, we talked about this, not today, but in the Green New Deal, we had a question about uranium. What do you think about uranium? Not
Uranium's,
uranium.
Uranium's tough. There's actually a fairly decent supply, and when you do go after it, it's hard to get to. I mean, it's tough to handle. It's tough to process. You get a lot of issues around the environmental impact. So uranium's not an easy one for companies to actually make money on. You know, then there's a few specialists who focus on uranium. It's not something the average mining, you know, folks will look at. In fact, you know, mines that have uranium in it, it normally is in addition to some other, you know, ore or mineral, and they outsource the mining of the uranium because it's just too difficult to handle. But you know, it kind of, if uranium starts going up in price, it does scare me a little bit. That's why.
Yeah, no. And, you know, one of the things is they're not going to be doing any nuclear expansion. Because
hold on, because the stimulus that was passed back in December did have double-digit billions of dollars for what they described as nuclear modernization.
Interesting.
So there is, going into R&D, there is some money that's going to be spent in that area. You know what that does for uranium itself, I'm really not sure, but you know there is going to be some money that's going to go into, you know, nuclear expansion. Now, under the Green New Deal, upkiss, you know, they avoid it like the plague.
Hey, Mark, can I ask you a question about Exxon?
Yeah.
What do you consider maybe like selling some cash secured puts on Exxon as a decent trade?
I do. You know, we actually did this we went through the balance of my Warren Market portfolio today. And I set up a trade in January of 2022. We like selling the 42.5 puts at $4.55. That's over a 10% return, right? The margin on that trade is about $37. So, you know, when I do the math on that, you know, 455 divided by 37 bucks, it's a 12% yield. That's not bad, but I think near term, Exxon is going to make such a breakout move that I like it as a call play or a call spread play.
Right.
One we did in our Sharp Bet service that made a killing. We've got two different energy plays in Little John that I both think are going to be great. And the you know, regulatory plays right into Exxon's hands. So
Totally.
Frank, you know, one of the pieces out of the Biden administration is that they have, you know, some thoughts on oil, correct?
Yep.
Yeah. What's their plans?
They don't think it's good for the environment. So,
Right. So they're going to restrict on federal right now. There are people that hold leases on federal lands. They want to restrict that type of access, right? What other things are they able to do, right? They can't. If I own,
they're not going to ban fracking. That's a headliner. They're not going to do that. I think they're going to pull it back a little bit, but in certain states, and again, it's going to be a political game, right? There's certain states like Texas, for instance, your current home state, Mark,
yes,
where the DNC is pining to turn Texas blue.
Mm-hmm.
And if they ban fracking, there's not a chance of them being able to do that. So they've got to appeal to certain voters. So I think you go to certain areas of the country, you're not going to see fracking banned, but definitely in certain federal lands, you're going to see it pulled back. Tribal lands with Devlin coming on as the new head of the Department of Interior, you're definitely going to see permits on tribal lands pulled back. So yes, you're going to see a reduced supply.
Yeah, and a reduction in supply plays into these conglomerate multinationals' hands, right?
Yep.
At the same time, and they've got a close relationship with Aramco and Saudi Arabia, and RDS. So I like Exxon, I like RDS, I like BP, I like Chevron. Chevron probably has the least upside because it was the best managed. Exxon seems to finally have their stuff in order. Boy, Rex Tillerson, does he owe Donald Trump a check? I mean, so when Rex Tillerson became Secretary of State, he was forced to sell his entire stake in ExxonMobil.
Wow, that's amazing.
Tax-free.
So let me see where that was. Oh,
2016.
Man. Yeah.
So they forced him to sell out of all of his stock when it was around $90. Tax-free.
He's probably calling DJ every night now.
Yeah, no. Hey, thanks, Don, for the extra money. So
good.
So Exxon. All right, I will talk a little bit about Exxon. It is one that I think near term has a ton of momentum behind it. Oil has a ton of momentum behind it. Today we're seeing a little bit of a dollar bounce. There's been a lot of strength in dollar over the last 2 days, but as oil gets to $60 a barrel, Exxon starts making money hand over fist. Mm-hmm. Anywhere over 40, they're making money. All right, above 50 is really when they start hitting their sweet spot. Mm-hmm. So, the April 50 calls for $2.82. Yeah, you know what? There is a dividend in Feb, but these are really, really cheap. $2.80. I mean, I think that's just ridiculously cheap. And I like owning them.
I give them a lot of credit because they actually, fought cutting their dividend and kept on paying it, and then survived, through the, beginning of COVID. And I think even now, like 45, 46 to me looks like a level that it shouldn't even go under.
No, I think that today is a one-day blip and it's going right back over 50.
Yeah. That's my favorite. And you can also play from an infrastructure standpoint using like the AMLP ETFs.
Yeah.
So that covers all the infrastructure players, and a lot of them are also doing renewable energy. So you do also get that kicker on that one.
Yeah. So circling back, Frank brought up the return of salt and how that could affect taxes. And one of the things he said is REITs. Now, I know you've paid a lot of attention to REITs, Bill. What's a REIT that you think could benefit from Frank's analysis?
Yeah, I like, I would still stay away from the retail mall REITs. But I like two REITs that I think are rock solid. And that's a hospital REIT, which is Medical Properties Trust. It's MPW. And Iron Mountain, which is a data center. And they're really good because they've moved into the digital data storage.
MPW?
I think it's MPW.
I know IRM.
It's IRM, and it's Medical Properties Trust.
IRM. And Frank, I think you mentioned one that you were looking at, the as well, right?
Yeah, sorry, I had you on mute. I have a cat howling in my house at the moment. So
All right, IRM looks nice. There's my XOM filled 280.
I was looking at Realty Trust.
Okay. I don't know the symbol for that.
Oh,
Arbor Realtor Trust, ABR. It's an interesting one. It has options. Look at that chart. And if they get some salt back, the vol's low. I like that. Reminder, this is the type of analysis you're going to be getting with our Volatility Edge program. You're going to get power moves. You're going to get some power income. If you want the trifecta of amazingness that is Mark, Frank, and Bill, we got to come up with a good, we need Andrew here so we can actually make like an acronym. We could be, we need
I'll have to work on it.
So, but you got, this is a nice one. And it's gone straight up. And options are relatively inexpensive. I mean, the July 15 calls are $1.15. If they start really talking about bringing salt back, this thing's gonna jump. Hey, yeah, make sure you're joining Volatility Edge if you have not. This is a really good opportunity to join our organization, get to work with me and Frank. One thing that we're going to be adding in the following month is Volatility Edge is going to start having a live training session on a regular basis sometime in Feb or March. So you're going to want to jump in. And when we start offering that live training, which means it's using up more of my time, do we think the price is going to go up or down? All right. Last name, and I've said this a couple times, we put this out. General Electric. I think it's another one. They make wind turbines. They're involved in plastics. They're involved in energy. They're involved in metals. They make airplane engines. There's nothing in the stimulus program that they don't touch. It's going up. All right, now, last thing. I want everyone to sign up. All right, if you are here today, all right, if you email me, mark@optionpit.com, and you email Frank, F. Gregory@optionpit.com, and you email Bill, B. Griffo @optionpit.com.
W. Griffo.
I'm sorry. Oh, that's right. William Griffo. W. Griffo @optionpit.com. If you email all three of us, and say something nice, all right, I will send you a trade next week, whether you're a client or not. GE options are only expensive when you look at the volatility. Sometimes you have to email all three of us, and then I'll send you a trade. All right. GE has earnings on the 26th, but I like longer dated. So the one I like in GE is like the June 12 calls for about $1.18 are cheap. All right, you email all three of us and I will send you a trade. All right, so if you don't know, and then it's mark@optionpit.com. It is F. Gregory. And it is W. Griffo. All right, you email all three of us, and I will send you a trade. And do I have any other questions? Did anybody have any questions about the Volatility Edge? I'm glad you like your GE risk reversal.
You misspelled Griffo.
Oh, I did. Whoops. Thanks, Jose.
Thanks, Jose.
Griffo.
Looking out for me. I like the GE trade, though, a lot. I'm surprised it hasn't rallied more.
Yeah. Oh, no, it's going straight up. And actually, that was another one we were selling puts in today in our Warren Market portfolio. I sold the Jan 2022 10 puts at $1.30. It's a 13. That is a, that's $1.30 on $8.70 a margin. It's a 15% yield.
Wow. Yeah, if it clears 13.25, it's going to fly.
Yes, and I'm going to send you a different secret trade. All right, on Tuesday if you email me, and Frank, and William, Bill Griffo. Again, I want to thank everybody for coming. I want to thank everybody for their time. Any last questions? Any questions about the volatility edge before I let you guys run? All right, we are taking down this special with me and Frank, all right, over the weekend. So you need to get in like now. Oh, Caterpillar. We put that out. It got a really nice pop. And this was my idea. It was not Frank's.
Oh, come on.
And Frank liked it too. I still like it to run. But, it initially, when we put the price out, it was initially up over 20%, 25%, I believe. That's not a bad time to take a little bit of money, but it's got a little time. Let's see what happens on Monday when they announce more of the stimulus. And let's see what happens throughout the rest of the day, because I like everything to run hotter today. There's a little bit of a dollar play in that one as well. All right, guys. Have a great day.
Thank you, everybody.
You have to say something nice. All right. If you want.
At least neutral.
Yeah. All right, Reginald. Have a great day, everybody. Appreciate it.
Thank you, guys.
Thanks, guys.